Sikka, and good afternoon, everyone. On behalf of Antique Stock Broking, I would like to welcome all the participants on the earnings call of HSIL Limited. From the management, we have with us Mr. R.B. Kabra, President and CEO of Building Products, Mr. Rajesh Khosla, President and CEO, AGI Glasspack and Garden Polymer, Mr. Om Prakash Pandey, CFO, HSIL, and Mr. Sandeep Sikka, Group CFO. Without further ado, I would like to hand over the call to Mr. Kabra for opening remarks. Over to you, sir.
Yeah, thank you, Amit. Good afternoon, good evening to everyone. And I welcome you all to the Q4 and FY21 results conference call of our company, HSIL Limited. I hope you and your family members and all loved ones are staying safe during this second wave of this pandemic, which is very, very infectious. And I pray for well-being of everyone. We have already circulated our earnings presentation, which is available on our website as well as on the stock exchange website. I hope you all have the opportunity to go through the presentation, and we would be happy to take any questions afterwards. I am pleased to report that HSIL has closed the fiscal year on a strong note. The company delivered a total income of rupees 638 crores in fourth quarter, registering a growth of 36.3% or Y-on-Y basis. Revenue growth during the quarter was primarily driven by improved volumes, realizations, and better product mix. The volume growth was supported by the increasing demand for glass container packaging from the beer and food and the beverage industry. The company delivered EBITDA of rupees 102 crore in Q4, registering a robust growth of 65.5% on year-on-year basis, with a margin improving to 15.9%. Margin improvements were driven by better product mix and higher operational efficiency. Despite the first quarter being impacted due to pandemic, we maintained growth momentum in the subsequent quarters and managed to close the financial year without degrowth in revenue, thereby covering revenue loss during lockdown. Our continuous focus on process and cost optimization has allowed HSIL to deliver strong growth in the profitability. In terms of our business segment, I will quickly talk about Building Products division, and thereafter Mr. Rajesh Khosla will talk about Packaging Product division. In Building Products, we are seeing a reasonable demand for products with a gradual opening of the economy, and we continue to move forward with our focus on introducing automation in business processes, reducing wastages, and increasing overall efficiency. Now I hand over the call to Mr. Rajesh Khosla for his remarks.
Thank you very much, Mr. Kabra. Welcome to the HSIL team. And firstly, I wish you a very safe and a healthy new year ahead. The segment of packaging products continue to be our major growth driver, and during the quarter we saw a strong year-on-year growth in revenues in all the sub-segments led by the glass container business, which contributes almost 88% to the division revenue. Glass container plant capacity increased to 85% as compared to the 79% in the same quarter last year. Technological upgradation is another key focus area where we have purchased 3 high technology narrow neck press and blow machines which have advanced control systems, and they are in much of the demand in the industry. Our customers have highlighted that they prefer NNPB bottles rather than the conventional blow and blow bottles, which are lighter, and these will address the demand especially by the beer industry and other allied industries. Important aspect that I would like to highlight is our plants are capable to operate with alternative fuel, and management conscious decision to use the best available fuel has allowed the HSIL to consistently improve and maintain its margin profile, though there was a huge fluctuation on the fuel side of the business. Now, I would like to hand over a call to our CFO, Mr. O.P. Pandey, to discuss the financial results. Thank you once again, and Mr. Pandey, please take over and go ahead with that.
Thank you, Mr. Khosla. A very good afternoon to all the attendees. I will first present financial highlights of the quarter and will discuss the full year after that. In Q4FY21, our total income stood at 638 crores compared to 468 crores in last year, a growth of 36.3% on year-on-year basis. The revenue growth was supported by improved volumes, realization, and better product mix. Revenue from the operation of packaging product was rupees 418 crores, registering a growth of 31.5% on Y basis. Revenue from operation of building product reported was rupees 216 crores, registering a growth of 59.7% on year-on-year basis. EBITDA for the quarter was rupees 102 crores, with EBITDA margin improving to 15.9% as compared to 13.1% in Q4 FY20. The margin improvement was driven by better product mix and higher operational efficiencies, resulting in lower fuel, power, and other costs. EBIT for the period was rupees 72 crores, with EBIT margin of 11.2% as compared to 5.6% in Q4 FY20. PAT was rupees 33 crores, with PAT margin of 5.2% in Q4 FY21 as compared to 0.7% in Q4 FY20. Please note that the profitability in Q4 FY20 was subdued as pandemic onset began during that period. Now moving to full year results. In FY21, total income stood at 1,881 crores compared to rupees 1,879 crores in last year. A stable figure despite Q1 adversely impacted by COVID-19 nationwide lockdown. EBITDA for the full year was rupees 308 crores, with EBITDA margin improving to 16.4% compared to 15.5% in FY20. Adjusted PAT was rupees 73 crores with a margin of 3.9% in FY21 as compared to 2.6% in FY20. Reported PAT figure for FY21 is high due to income tax write-back of rupees 14.7 crores. HSIL continues to generate a strong net cash flow from the operation of rupees 298 crores in FY21, registering a growth of 179% on year-on-year basis. Please note that this is excluding a one-time income tax refund of rupees 51 crores. In FY21, our capex outlay was rupees 117 crores, which was primarily incurred for technological advancement, debottlenecking, operational efficiencies, and our greenfield projects. In light of the company's performance, the board of directors have recommended a dividend of rupees 4 per share for FY21, subject to approval from the shareholders. This will equivalent to a payout of 200% on the face value of the share. Thank you very much, and we are now ready to take any questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kaushik Poddar from KB Capital Markets. Please go ahead.
Yeah, the building products profitability, why has it suffered compared to the packaging products?
So, if you see building products profitability primarily consists of B2B business. Here in HSIL, building product division only manufactures. They doesn't have a brand. So the role of the building products force division in manufacturing is like an OEM contractor. So what happened is, if you see Q4, the margins are good, but during the year, the first, when we had a lockdown, so there were fixed costs relating to the factories, and as per the accounting standard, we could not pass it on, or load it to the value of the inventory. So it was retained in HSIL. So that primarily resulted in the lower annual margins. But Q3 margins are in line with what has been approved by the independent consultant who benchmarks all the related party transactions for us.
Okay, so that means we can only expect a 3% EBIT for building products. I mean that is that.
Yeah, 3 to 5%, 3 to 4.5% is the range recommended by one of the big four who is a related party transaction on EBIT level.
Okay. And what will take the 3% to 4.5%? Because last quarter was more or less a normal quarter, right?
So why I'm saying range of 3 to 4.5 is for different products it's a different range because of the stock.
Okay. Hello.
Yeah, I'm listening.
Yeah. So for different products is different range. Okay. And on the what are the expansion thing, that CPVC pipe, that project that we are putting up, that is already part of that building products, or it's a separate thing altogether?
So it is a part of the building product. Right now we have a capacity to produce from 35,000 to 38,000 tons. And why I'm saying 35 to 38,000, it depends on what diameter the pipes are being produced.
Okay.
So we are putting up a capacity which will, we're investing into pipes facility so that we can generate more than capacity in the system. So this should be up running. Another capacity is there towards, putting up 154-ton high-end glass furnace, which is a clear glass furnace. So our focus there is to, tap the perfume market, the nail polish market, and a part of the pharma market also. So that investment is also there of somewhere around 450 crores.
So what is the total in the capital investment you're looking for? Both these projects.
Apart from this, there are normal capex also. This is spread out. But I think our estimate is based on current situation 21-22, and the total spend should be somewhere between 250 crores to 300 crores of capex in financial year. Yeah.
Okay. And is that the final thing, or you have more to spend in 22-23 also?
So that depends on how the things come out during the year.
Okay. Will these projects be coming into operation in 21-22, or it will?
They are likely to come up only in Q1 of next financial year.
Okay. And how are you funding this? Because internal accrual will not be sufficient to.
So we'll use, if you see our total long-term debt today is around 750 crores.
Okay.
And if you see Q4 EBITDA is around 100 crores. So on an annualized run rate, we are around 400 as a base. So we can't take Q1 as Q1 we had a loss during the COVID. So we have an adequate amount of leveraging, and our repayments falling due next year is somewhere around 85 to 90 crores. So we'll raise on a certain debt equity, the long-term debt, and we'll use part internal accruals also to fund the growth.
Okay. So as far as this company is concerned, the main profitability will come from the packaging products, right?
Yes.
That trend is not going to change over the years.
No. We have given this as a part of our investor presentation also. You can refer the some trend for market shares.
Okay. Thank you.
Thank you. We would like to remind participants that you may press star 1 to ask a question. The next question is from the line of Aditya Jhawar, an individual investor. Please go ahead. Mr. Tower, your line is unmuted. Please go ahead with your question.
Okay. Hello, am I audible?
Yes, you're audible.
Yeah, sir. I just want to understand two things. One is the margin, what we achieved in packaging segment, that is 14.5 to 15%. Is it sustainable over 3 to 4 years?
So, I can give you broader guidance. Nobody can predict the market, but based on the current market conditions as on today, we feel that these margins are sustainable. In fact, as I told you, we are investing into newer furnace, which is 154-ton furnace, which we feel that will give us better margins, better realization, because we are trying to tap the high end of the market there. So there are, we are trying to work on product mix. We are trying to work on, tapping the high end of the market. So investments are going towards that. And we feel that margin expansion should happen over the next 2 to 3 years in a range of around 2 to 3%.
Okay. And regarding the building product segment, I see very less EBITDA margin. So is there...
as a part one of the first question.
Okay, thanks. That's all.
Thank you. The next question is from the line of Lucky Nasir, an individual investor. Please go ahead.
Yes, sir. First of all, congrats on a decent set of numbers for the last quarter. Sir, during the last con call, you had mentioned that your broad outlook for the current year would be EBITDA of 100 crores per quarter. So would that continue and hold, considering that your top line has expanded considerably? The second part of my question is, HSIL has an arrangement with Somani Home for the building products. Does that mean that we can also manufacture for another party? And would this be a final arrangement, or would there be some kind of finality to the whole deal, sir? Thank you.
So I'll answer your question in a sequence. So as regards the previous phone call, so I think what I would have stated is that we in quarter 3 we had 100.6 crores. I think I feel that was the EBITDA, and I think we should be able to maintain that. And the quarter 4 is there. Although the margins have come down slightly, it is due to the fact that many input prices have increased, and the pass-on effect happens with some lag. The negotiation for which happens with our customers, they may agree, they may not agree, or they make time to, some time to agree on that. But in terms of the guidance, it remains the same, that the run rate shall be maintained. Run rate can slightly get disturbed during this financial year, because we have one glass furnace which may be coming up for repair, and during that repair we lose the tonnage and the sales for that particular period. But once it is repaired, then the life of the furnace is good to go for next 8 to 10 years. Second question is in terms of arrangement with Briloka, which is a wholly owned subsidiary of HSIL, for supply of finished goods to them. This is a contract on an arm's length basis, which is duly vetted by third parties, vetted by audit committee, board, and also approved by the shareholders. Company is independent to sell any of its product, but excluding the brand Hindware, which belongs to Somani Home Innovation Limited. So it can go for any third party brand to anybody and manufacture for them. So two companies are independent of each other in terms of decision making now.
Sure. And sir, in terms of your long-term debt, you mentioned it's 750 crores. What is the figure which would you have in mind for another 2 years in terms of comfort level on the balance sheet, sir?
So as we are investing, money into further expansion, because our capacities are already reaching 85-87%. We have to expand as we, we'll miss the growth part of the business. So we are investing into development of the glass facilities, the pipes facilities. So the debt level may increase as on 31st March 22, because the money would have been invested, but the plant would have not started. So maybe, in 3 years' time, it will come down substantially because right now our repayment is lower at somewhere around 90 crores per annum. But in coming years, the repayments will increase on this 750 crore of debt. But broad thought is that, we should be adequately leveraged. We should be able to maintain good amount of debt because debt is coming at a good cost to us, which is around 7 to 8% pre-tax cost. So post-tax cost is much lower. So we will be able to create a lot of shareholder value using, appropriate amount of leveraging balance sheet.
Thank you, sir. Fantastic. And one last small question, sir. So the CPVC capacity of 35 to 38,000 tons, does this have the same arrangement like the other building products with the Somani Home, or can HSIL sell this independently in the market, sir?
So HSIL can sell any of its products independently into the market.
No, but the CPVC also, does it have a branding arrangement with Bricola and anything, or we sell directly in the market?
No, I think it's important for everybody who's attending this HSIL call. So the brand Hinduware now, as a part of the demerger, is not part of HSIL. So it is a part of Somani Home Innovation Limited and its wholly owned subsidiary Bricola. So whatever is manufactured is under the branding licensing contract. So any product which is manufactured by HSIL for Bricola or HSIL under the brand Hinduware can only be sold to them, but not in the market. But if for any third-party brand, they want to get anything manufactured from HSIL, it can be done by HSIL.
So the CPVC we are doing under Hinduware, sir?
Yes.
Thank you, sir. Thank you.
Thank you. We would like to remind participants that you may press star 1 to ask a question. The next question is from the line of Rajesh Shah, an individual investor. Please go ahead.
Hello.
Yes, Rajesh.
Yeah, sir. Congratulations for the good set of numbers for Q4. Just 2 questions I have. One is regarding the EBITDA margin. The guidance you have been, your last con call, you have given the guidance of 18% in a quarter. But this time, because of the expenses has gone up and some arrangement of inventory, that has gone down to 15%. So will we maintain the same guidance in the next subsequent quarters, or how is your how you see the subsequent quarter future?
So, when we give a guidance, I think there was a disclaimer with the guidance that it was, medium to long-term figure. Because it's very difficult for any organization to give any quarterly guidance, and generally it is not our practice to give a quarterly guidance. But just to explain that why the margins are slightly lower, as I explained, some input prices, raw material have increased drastically in last 1 quarter. But there is a lead and a lag, some of the times on all these things in terms of passing on to the market.
But we have taken the price increase in the product, right? And in the Q4.
Yes, but these price increases are not absolute, one-to-one arrangement. You have to see the market. You have to see how the market is also behaving, and then only you can work around it. Especially on the glass, when we deal with all the multinational clients, it's a time-taking process for seeking any approval for any price hikes. So we are working towards that, and as far as the guidance of margins is concerned, our guidance is always on a medium to long-term range. So it is not on a quarterly basis. Okay.
And sir, second question is, when we have a building margin of, let's say you have already given the answer of 3 to 4%. So every time, whenever the margin expansion will happen, it will be in the glass division only, right?
Primarily because that is the largest, entity now within the organization, the packaging product entity. And there's a market opportunity, on an overall basis is also huge, which we are trying to tap in.
Okay. So because of this, once we have a guidance of, let's say, 18%, and also with the comparison of peer, our market capitalization will be like in the next coming 2-3 years, it will be more than, also it will be 4,000 to 5,000 crores.
Rakesh, it's always our practice. Whenever we are giving a market guidance, it's always on a medium to long term range. मतलब एक तो quarter में hold नहीं कर सकते किसी को.
Yeah, sure. Thanks.
Thank you.
Thank you. The next question is from the line of Saurabh Shroff from QRC Assurance and Solutions. Please go ahead.
Hi, good evening, gentlemen. So my first question is on the packaging division. What are the demand trends that you are seeing, let's say, in the last 3-4 weeks? since these lockdowns have started to spread? How are your customers reacting to this?
Yeah, I'll request Mr. Rajesh Khosla, our CEO of the Glass Division, if we can take this answer, please. Take the question, please.
Okay. Yeah, thank you, Mr. Sikka. You are asking the sensitivity between a lockdown and the consumption pattern of the glass products. Am I right?
Yes, that's correct.
Okay.
See, correct me if I'm wrong, but where I'm coming from is that December quarter was a lot of normalization. Even up until middle of March or almost till end of March, life was pretty normal, coming back to normal, and then we obviously had this shock with regional lockdowns. And plus, we are sort of in the summer season for, let's say, the beverages companies. So I'm just trying to get a sense that how are your customers reacting to this lockdown?
There are two parts of that. One is the industrial averages, and one is our company performance in that time. So these are two separate things we have to understand. Now, I'll answer first about the industry averages. See, when I say when there will be a lockdown, it's a very typical of that 30 to 35% of the consumption of beverages, particularly beer and liquor and all, they happen in a restaurant, pub and bar and hotels. And around 65%, it happens, the people consume in their house and parties and close parties and all. So with the lockdown, this 65% remains intact and slightly goes up. So the demand basically from 65, home consumption goes to 70%, and the other consumption, it comes down to 5-7%. So the total net effect comes out to be 75%. Demand remains, 25% is lowered down. In the case of a beer segment, which is quite a big segment, so what happens is the demand, particularly in the northern region where Delhi is struggling and the whole Punjab, Delhi, UP is struggling, the demand has fallen by around 40%, 40 to 45%. And secondly, in the southern part, it has dropped by 25%, and in other parts around 30%, something like that. So these are the numbers. So typically when there is an absolute lockdown, you can very well assume that the total consumptions will come down to 70%. But the problem is not only the consumption by the consumer, the problem is the whole supply chain gets disturbed sometime depending upon the type of lockdowns we are forcing. If there is no transportation, if there are no facilities, if the people are not coming in the factories to fill up the bottles and all, probably the supply chain will dry up, though there is an end consumer demand, but the supply chain cannot sustain with that part. So this is one part. Second part is you were talking how as our company, I mean to say HSIL, respond to that. We have the long-term contracts with our customers, and we are always in an advantageous position, even though there is a fall in the demand, basically because of the lockdowns, but we try to get some extra share from our customers through, you can say, on a long-term basis and other arrangement basis. So that is how we are managing the show.
And I guess given our in leading market share, that obviously puts us in a good position.
Yeah, so we have a wonderful team, and they work very hard, and I hope that even in this lockdown, the numbers will be better than what it should be.
Understood. And my second question is on the building material side. So just to clarify, are we as of now doing any contract manufacturing for a third party or are we?
So this is the operator. There is a slight disturbance coming from your line. Request you to mute your line after the question so that the management answers your question.
Okay, sure. Are you able to hear me right now?
Yeah, we can. I heard your question. So right now we are doing only for Loka. We may do for a third party as and when the demand comes.
And what is our capacity utilization in this segment?
So we have been in building products. We have been able to build a good capacity utilization of somewhere around 85 to 87% during the Q4.
And any plans to add capacity to this particular segment?
So pipes, we are adding capacity, as I already explained.
No, I'm talking in the ceramic or the tank.
No, right now, no.
So, sir, listen. I will just butt in here. We are adding capacity of around 150,000 pieces between both our plants. by putting up 2 shuttle kilns and by expanding our casting capacities, which we announced last year, and the work has just started, and I think by end of the year, capacity will go on stream.
Okay, got that. Okay.
New capacity announcement is not there. So this is already announced.
So how much is this? How much is this addition on the existing base?
That will be around 7%.
Okay.
But it will be all for large pieces and big pieces, for which demand is growing in the marketplace, because people are going for better and better products and high-end products. So we are building capacity for producing more high-end products.
Okay. Agree. So, sir, one final question on this. I'm sorry, I'm a little bit new to the company. So maybe you have answered this in the past, so I apologize in advance. What was the rationale for sort of keeping the manufacturing in this business and the marketing in the other business? If you can just help recap that for me briefly.
So if you see, before demerger, HSIL had around 8 businesses. So we had a sanitary ware business, we had faucets, we had pipes, we had consumer products, we had Evoke furniture, and then we had a glass packaging, PET packaging, and other packaging products. So whenever we were talking to any investor community, there was a mix of a B2B and a B2C business within HSIL. We worked extensively for 2 years, worked with Big Fours to understand how we can demerge it. So one important point came is that there are B2C businesses and there are B2B businesses. And in also, to make it efficient from a stamp duty impact, if we transfer the parcels of land and other things, so they would have been an outgo in terms of the stamp duties. So based on the recommendation of the legal counsels, based on the recommendation of the market players, so outsourcing is not new now to India, and this is an excellent thing which we are working on today, mechanism. So that's why we retained the manufacturing part here, so that the scheme is more efficient in terms of duties and other things.
Okay, understood. Thank you very much, and wish you all the best and stay safe.
Thank you.
Thank you. The next question is from the line of Magan Shah from Moneybee. Please go ahead.
Hello.
Yes, please.
Congratulations on a good set of numbers, and thank you for the opportunity. My question is pertaining to the building products division. Sir, if you could tell me how much of our capacity is earmarked for HSIL currently?
So there is no marking of a capacity as such that we are marking a capacity for Birloka or HSIL. So it is based on an annual contract and is also based on a monthly contract. So that is how the contract is run between HSIL and Birloka.
So is there a specific number of pieces that we have to supply on a monthly basis?
And also the annual contracts.
And annually also?
Yes.
So after catering to HSIL, how much surplus capacity will we have to cater to other third parties?
So based on the plans going forward, we feel that very little quantities may be available for third parties. So we'll be, having capacities to cater right now in the next 2 years prior to Birloka only.
So do we plan to enhance our building product capacity to cater to other companies, or our focus only on Birloka?
So we have already answered this question. This is a pipe expansion. There was a building product expansion which we discussed in the last few calls.
Okay.
So then there's no new additional capacity expansion announced by the board.
And in the second wave of COVID right now, how do you see the demand for in the next couple of quarters?
So this COVID, I think lockdown is different from a COVID lockdown which happened last time. So demand may go off in certain areas, as Mr. Khosla explained. Like right now, we were having a tough situation in North, but I think based on the limited data which we are getting, that Mumbai is opening up, Maharashtra is a little bit opening up, but Karnataka is going, under the lockdown. So we feel that the lockdown impacts will be there all across the country, but spreading on 6 to 8 weeks, every part of the country may get affected. But the revival also we have seen very fast in last year. So last year again, when we were losing the turnover in the first quarter because on account of liquor sales, lower liquor sales, beer sales, bottles were not sold, but then the recovery has been very fast. And in quarter 3, quarter 4, we were able to recoup to a large extent.
Also, can you also tell me whether the channel inventory right now is high or it's sold out?
Channel means what?
The distributors.
So we sell, HSIL sells only to B2B. They don't sell to distributors.
So it's only to, if the sales are all together only to Briloka, right? There are no middlemen in the middle.
No, there is no middleman in the middle.
Okay. Thank you so much. That's it from my side.
Thank you.
Thank you. The next question is from the line of Aman Rai from Edelweiss. Please go ahead.
So just wanted to check if you see any increase in demand of vials because of the vaccination or other medication that is being used for COVID.
Rajesh, can you take this question, please?
Sure, I'll take up. What I understand, you are talking about the vials demand. Am I right?
Yes.
Okay. Now, let me explain you. The total vials demand in the country is around 80,000 tons per year.
Okay.
Hello. And out of this, 30,000 tons is imported, and 50,000 tons the glass industry is manufacturing locally. So, as far as demand is concerned, yes, the demand has gone up in the COVID-related activities, particularly like a vaccine and other injections and other things. But these are a different type of glass. This is called a type 1 glass. For the type 3 glass, because other activities have been subdued, so the demand of the vials, particularly in type 3, which is a commercial glass, has reduced to some extent. But once I think lockdown, everything opens up, it will be back to the normal. And in the type 3 demand, we are yet to capture the material which was coming from China. The government of India will be pushing very hard to at least cater the demands which earlier the pharma industries were catering with the imported vials. So still, you can say around 40% of the demand is yet to be catered to control the imports, and then it will take off. What I can foresee after a year or so, when the pandemic will be totally in control.
Sorry, I lost you.
Hello, sir. Your voice is not audible.
Rajesh, you are there?
Sir, the line from Mr. Rajesh Khosla is disconnected. Kindly stay on line till I reconnect him. Ladies and gentlemen, we have the management line reconnected to the call. Thank you, and over to you, sir.
Okay. So I was talking about the vials. After this pandemic is under control, there will be a huge spend on the healthcare infrastructure and health-related things, and where the vials demand will go up like anything. So today, what I foresee a 80,000 ton demand, which certainly is going to jump in multiple folds in the times to come. But again, I repeat the same thing. The first step is we have to reduce the imports in the country. That is the first step, because pharma and the government, both the areas, they are now interested to have a supply chain within the country. And then the second step will be, there will be a huge demand which they are going to come up. Thirdly is, India is still a pharma capital of the world. And after this situation, when the China has a credibility issue for the rest of the world, so there will be some sort of a demand which is going to come up from the other countries in India. And there also, I think the world demand will be on the peak. So we expect a good amount of business in the vials. And just to inform you that our new project of 154, which Mr. Sandeep Sikka has informed you, there is a dedicated line machine which is going to produce 365 days only vials of a high quality.
Okay. This will all be type 3 glass.
Yes. We are producing only type 3 glass and type 2. We are not producing type 1 glass. right now. The important word is right now.
Okay. Just in continuation, so have you seen a shift in demand because certain players would be busy catering to type 1 glass demand? Have you seen?
No, type 1 is not a choice. Type 1 is a very expensive one.
Right. So, I mean, some of the usual players would still be manufacturing type 1 glass, and because of their capacity constraints, certain other requirements would start going to companies like HSIL. Is that the case?
Okay. Type 1 and type 3 is a technical issue. So wherever type 1, wherever the material, wherever the pharma products are to be packed in type 1, they will do it in type 1 only. Wherever they can do in type 3, they are going to do in type 3 only. So, so what we expect that in the times to come, yes, there is an overlapping area also where there are some high-end pharma products where they can easily pack it in type 3 technically, but they can afford to buy the type 1, so they are doing it. But in case the demand goes up, supply part is less, so these type of overlap demands can come back to type 3. So we expect that our type 3 production with the new furnace will certainly, we are going to take care of all these demands. Right now also we are producing. Right now we are catering around 5 to 7% of the world's demand in the country, even today.
Okay. Okay. So these are regular medicine vials, not vaccine vials. Okay.
Yes, they are regular. They are vaccines also, but they are normal vaccines. They are not high-end COVID vaccine. They are not.
Okay, understood. Understood, sir. Thank you so much.
Thank you. The next question is from the line of Nikhil Gada from Abacus Asset Management Company. Please go ahead.
Hi, sir. So just a couple of questions. First is, I think on the call you mentioned that one of our glass furnaces are going up for repair. So could you tell me when we are planning to take this up for repair, and which furnace is this one, the 651 or the 951?
Rajesh, please.
Okay, we do not have a 650 metric ton furnace. Our furnace size is 500 metric ton. We have two 500 metric ton in Bongir plant. So out of that, one furnace will go to the repair. As Mr. Sikkat informed that after every 10 years, it's a normal practice all around the world, the furnace is to be rebuilt, and typically it takes around almost 2.5 to 3 months time. So in this COVID period, there will be a little challenges on the timeline, but still I think as a company will try to finish within a time frame of that. And this rebuilding will be coming from the August onwards. So August, September, and part of that October will be a period where this furnace will be under shutdown and it will be repaired.
So we will not have this capacity at least for this 2.5 3 months.
Yes, this capacity will go out for us, but it is not going to have an impact 100% on us, because we also try to build up the inventories during the year, which we have already done that, and part of that will be covered up by the inventory dilution. Not 100%, but part of that only.
Sure. And I wanted to understand the gas price scenario. As in 3Q also we saw some benefits of gas prices in our margins, and I believe 4Q sorry.
No, I missed out. What do you say?
So I'm trying to say that I wanted to understand what are our gas prices in 4Q versus 3Q, because we have seen good benefits in 3Q as well as 4Q in margins. So this wanted to understand.
You mean to say glass prices, no?
Gas prices.
Yeah. Fuel price, Rajesh.
Yeah, fuel price.
Okay. I think fuel prices, since the fuel market is just opened up, so many private players are there. So now we can always negotiate with the private players to get the best deal out of them. So we are also doing one-to-one negotiations with the private players as well as the government players to get the best deal out of them. Yes, our gas prices are better, but I'm not aware that how far we have to open up our gas prices, because this is a confidential deal with the gas prices or gas suppliers.
What we can communicate here today is that we have now flexibility in our plants to use all mixes of gases. So over last 2 to 3 years, we have invested money towards the development of coal gasification plants, development of the natural gas connections. So we have a capability now to use natural gas, coal gas, furnace oil, pet coke, wherever the prices are.
Mr. Sikka, I'll pitch in here. I like to inform that we are one of the players in the world which has such a flexibility to use any type of multiple fuel. So we can use natural gas, we can use coal gas, we can use LPG, we can use furnace oil, we can use LSD, we can also use pet coke, and we can use other type of fuel also. So we have developed the capability and capacity and competency to use all these mix of the fuels in the best possible economical manner.
And this would be across all our plants, right?
Yes, this is across all our plants in glass division.
Yeah, got it. And sir, just lastly, one more question. Sorry, I missed the building materials margin part. I think that was the first question. So just wanted to understand our margins are close to 5.5% in 3Q, which has gone to 3.5%. I understand you had mentioned that that is the range, 4 to 5%. So just any specific reason, or it is just a quarterly thing?
So basically, we have given this guidance, for a times now that for the range is between this around 4 to 5%, because this company doesn't have any now B2C segment with them. So it's more of a B2B manufacturer on an OEM basis. So the long-term margins is set based on a third party. We hire Big Four every year to validate these things, which are taken to the audit committee, to the board, and based on these, the decisions are taken. So it will remain in this range only. So quarter to quarter variations may happen up and down because the adjustments have to be done. The settlement of pricing, the settlement of margins are done, for the annual basis, so that the related party compliances as per the approved policies are done.
Okay. And sir, sorry sir, just one last question if I can squeeze in. Regarding, apart from the cosmetic division where we are expanding, because we are already now operating at a decent sort of capacity utilization, is there any plans to expand capacity in our core packaging business as well?
So we will take this decision. So unless board is approved, nothing can be disclosed as such. But we keep considering various options. How we can expand our business, because we feel a good potential in this business now to grow. But as of now, nothing has been approved by the board, so we cannot talk about it right now.
Mr. Sikka, I'll slightly pitch in regarding the capacity expansion. Number one is 154 ton is already under implementation, and on a day-to-day basis, we have been debottlenecking all of our capacities as much as possible from time to time. So those capacities will add automatically. It's a very organic and normal routine of things which we go on adding up.
Sure, sir. Thank you so much, sir. Thanks.
Thank you. The next question is from the line of Nitin Gandhi from KIFS Trade Capital. Please go ahead.
Hello. Thanks for taking my question. Can you please share what is likely to be the market share post implementation of the capex plan as far as vials business is concerned? At present, we are getting roughly 5 to 7%. So what it will be likely, and what is likely asset turnover for the expansion? Thank you.
Rajesh.
Okay. As I informed that the vial market as on today, it's a pre-pandemic number I'm talking about, is around 80,000 tons a year. And right now we are producing almost 4 to 5,000 tons a year we are producing. And once our new furnace is operative, we will be producing further 5 to 7,000 tons of vials in a year. So our total capacity will go up to 10 to 11,000 tons, which is almost 15% of the market. So we will be there from 12 to 15% of the market in the vials.
There was one more question. Asset turnover for the expansion and the relative margin for that expanded capacity. And when do you see that it's likely to be fully operational?
Which one?
So basically, from this new facility, we feel that in the first few years, the expected turnover should be, let's say 0.8% of the investments, and then over a period of time it gets built up. So margins we are expecting higher than the existing margins because this is a value-added product, sells at a higher sales realization. Until unless it gets started, I think it's difficult for us to give a market guidance. I think wait for some time, we'll give the guidance as we are nearer to the implementation of the project.
But surely since it's a 0.8 of asset turn, it should be somewhere around 24-25% plus margin. We must be aiming, at least aspiring to that.
I couldn't get your question.
Since the asset turnover is at 0.8, I'm sure at current dynamics you are at least aspiring to have 24 to 25% plus margin. Then only it makes economic sense.
Yeah, it is there, but in this, we'll have to build up the capacity fast
Right.
because we feel a stronger demand coming through. So let's start, and I think once we are more nearer to it, we'll give a guidance on that.
Okay. We are expecting this to be operational in next first quarter of the next year, right?
Yes.
Oh, thank you. All the best.
Thank you.
Thank you.
Thank you. The next question is from the line of Shreyans Jain from Quest Investments. Please go ahead.
Hello.
Yes, please.
Congratulations on a good set of numbers. Just broadly on the building products, can you give me some color on how the sanitary faucet and pipes business has behaved in terms of growth?
Sorry, I missed your question. How much is the mix?
Yeah, in terms of what is the mix and how have they behaved in terms of which category has grown faster and
So I think we answered this question in the last call that we are under a confidentiality contract with Briloka because our results have been before then, so we can't disclose anything other than what we already disclosed in the market, so because it may trigger an insider for them.
Okay. And so
Sorry for this, son.
no issue. Just broadly wanted to understand, sir, if you were to make the building products for a third party, what kind of margins would you make on these products? I mean, apart from Briloka?
What, sir?
If you were to make building products for a third party, would your margins be in the same range, or would you be able to take higher prices, and would you be able to do higher margins in this?
So it depends on the SKU which we are doing. It depends on the negotiation what that party do. So ultimately it is a settlement of a price on a negotiated basis with that party. So I think the margin should remain also in range bound because it's a pure manufacturing organization.
Okay, all right. And just one last bit on we've already added a capacity of about 150,000 pieces. So I'm just trying to understand with the current growth rates that we're seeing in the building products, do you think this capacity will be able to suffice for the next 1 or 2 years, or will we need to do some CapEx?
Yeah, Mr. Kabra, please.
Yeah, this capacity will be sufficient for next 2.5 years. So maybe how the market behaves, looking to that, maybe next year we have to decide internally, make a projection and see whether we need to expand the existing facilities or we have to go for a greenfield plant at one location. But currently, as per the current market scenario, we feel that this capacity should be good enough for next 2 to 3 years.
Okay, all right. And so just last bit on the pipes, after increasing your capacity, what will your total capacity be? I mean, currently it is 35 to 38,000 tons. Post expansion?
It will be around 48,000 tons.
Okay, all right. Thanks, sir.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to Mr. Sandeep Sikka for closing comments.
So I'd like to thank everybody for attending this call today. I know there would have been more questions. We'll be happy to take it. You can write it to us. Markets, quarter 3, quarter 4 has been the good numbers for us. I think the medium to long-term guidance is that we should be able to, maintain the margin plus able to build up the margin with all the new initiatives which we are doing. Current market conditions may have, certain fluctuations on the results, especially in quarter to quarter due to the pandemic, COVID pandemic. But having seen the last year, we feel that the ability of the company to come out of it is strong, and we should be able to grow and sustain ourselves. Thank you, everybody, for connecting today. Thank you very much.
Thank you. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.